Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is the 26th of July. Almost over. Well, I can't believe we're halfway through the summer already. It's kind of scary how time is flying by, but let's get to it. I want to begin today off with a review of the stocks that we're watching and a couple of members' stock chart requests. We'll begin with TCP Pipeline Partners. We booked profits on TCP last week. Now, we bought it back here where nobody else wanted it. It was an extreme oversold trade. The shares rallied, and we booked profits right up here into resistance, and the shares subsequently pulled back. We're looking to get back involved here on this pullback. It's paying a big fat dividend. The energy sector is in play right now. It's in a bull run, and this stock has a lot of catching up to do. I should say an MLP, Master Limited Partnership. If you try to buy it for your IRA or anything like that, you may be prohibited. But you should be able to buy it, if you like it, in your brokerage account. So TCP, we're looking for a rally here. Again, we've pulled back off the highs. We knew that this was unsustainable. We were trading up and into resistance A, B. We were trading above the third standard deviation Bollinger Band here in red. A sell-off was so highly probable, it would have been ridiculous for us to stay long. So we booked profits. Thank goodness that we did. Now we're looking to buy back in at cheaper prices on this pullback. So more to come, members, on TCP. Grubhub. We booked profits on Grubhub yesterday. We enjoyed the earnings pop higher. And I mentioned this to members last night on Market Wrap that the management of Grubhub was very smart. They knew that they had a winning hand in terms of a headline regarding their earnings. But also, they wove into the announcement that they were doing an acquisition, which would have been generally negative were it not to be accretive to earnings on the share price. Traders looked at earnings, not at the acquisition, and the shares just ripped higher. So as we were trading at and above the third standard deviation Bollinger Band here in red, we decided to book profits. Now, even if you take a look at, and let's go with an hourly chart, you can see on an hourly basis, we're very, very extended here. So in all probability, we're going to get a pullback today, tomorrow. That doesn't mean it can't move higher today, but we are going to get a pullback very, very soon. And on that pullback and consolidation, we'll be looking at the 2-hour chart setup, looking for a base, then a breakout. Then we'll be looking to get back involved with Grubhub to the long side. So although it's overbought right now, I still think there's more fuel in the tank here for the shares to move higher. Google. Now, Facebook got clubbed last night on earnings, so it's going to be interesting to see how the internet space holds up. Google, which reported strong earnings despite the fine out of the EU, appears poised, were it not for the Facebook announcement last night, to move higher. Now, normally at an all-time high or the top of a trading range, when I see a hollow-filled candlestick, which you have here in black, and which is what we saw on the 24th, I would say, you know what, be very, very careful of the shares, because that's a sign of indecision, like a doji star formation for you technicians out there. Now, the fact that on Wednesday we were able to flash a bullish engulfing of the prior day's move, an outside day, that's a pretty bullish event. And we did so on volume. So that tells me that we still have more fuel in the tank here to move higher. But just be careful. You do have some sellers up here, as noted by the fact that on the 24th, we could not close at the highs of the day. Why? It's not because that there was resistance above. There wasn't. We're at all-time highs. The reason is that you had profit takers. So just be wary. Short term, though, we're moving higher. Amazon. What we have here, let's update the chart. What we have here is a bull flag setup, and we broke out on the 24th Yesterday, a continuation breakout pattern. RSI is rising. Stokes are rising. I think that they're going to take Amazon to 2,000 per share. So if you're thinking about shorting Amazon before that level, I think that it's a foolish bet to play. Why? It's because traders are OCD, like me. I have it. I understand it. So when I see shares like Amazon trading at 1863, just teasing the $2,000 mark, is it bullish for the stock? Is it bearish for the stock? Really, it doesn't matter, right? It's just psychology of people. That's it. Volume was light on the breakout yesterday. So Amazon, I still think, is moving higher. Again, the fly in the ointment. How will the internet space react to Facebook's earnings? Netflix. Now, here's a stock that I'm looking to short. I've spoken about this with members. I don't think that it's to be shorted right now. I think that in the short term, we are moving higher. And what I'm looking for here in the short term is to buy the shares. You may be saying, wait a minute, whoa. You just said you wanted to short the shares. I do. However, what we're looking at here is a tight triangle formation. I think that we are going to break out. We are going to rally up to either A, fill this gap that opened up on the gap down on the 17th, or B, up and into, the last time I spoke about it was 400 to 405. Now I'm saying that it could rally up to 405 to 410 as this lower band of the prior uptrend channel continues to rise. That will now act as resistance. So I think that we could quite possibly rally back in an effort to try to recapture. And I'll be looking for a failure at that level to short the shares. Now, why am I bearish on Netflix? A, competition. B, their sub growth declined. And technically, if you take a look at a monthly chart here, this is a very high level view. We had RSI above 90. It is now pulling back. Stokes, very extended, double top, lower highs. Now we're looking for lower lows. Ultimate oscillator, lower highs. It is now breaking down. It doesn't mean go short these shares today, folks. You will get burned if you short these shares today. This is a higher level view observation. My observation on this monthly chart may not pay off until early 2019. So please don't go shorting the shares right now. Short term, it's a buy on a breakout. Look at this double top here on ADX green. Very overbought on signal line. Our MACD histogram is now beginning to lose momentum. So that's the higher level view. Short term, though, I think that we break out and move higher. 3M. It is showing some strength. It has been a laggard for quite some time now. And what we're looking for is a continuation move out of this base that has built. Now, we did close above resistance yesterday at 203.17. I think that we're moving higher here up to the 206.79 level. And if we break out above that level, this is a buy all day long, weekly chart. Now, on a weekly basis, again, this is the higher level view. By using the weekly chart, we remove the noise from the daily chart. And it gives us a better perspective of as to where the shares have been and where they might be going. And you could see that we built a nice base and we bottomed out here back in April, the week of April the 30th. We've been consolidating. Then the week of July the 9th, we broke out. Then we pulled back. The week of July the 16th, retested. Now, this week, it's pulled back and retested not just the prior resistance level, but prior support as well, and reversed off of it. If we close out the week at or near the highs of the week, that's a very bullish setup, and I think that we're moving a lot higher on 3M. I'm very bullish here. Great volume. Let's watch and see how we close out the week, because this could quite very well be a buy. The 20-period moving average, which is declining, will act as a bit of a ceiling. But net, if we close strong this week, I think that we're moving higher in the coming weeks. Bank of America, daily chart. A bullish engulfing of the prior day's move yesterday. I think that we're moving higher. Next stop, 31.50. Not my favorite play, as these money center banks have exposure to trading, and they have exposure to international risk vis-a-vis tariffs, trade wars, whatnot. Not my favorite sector to be in right now because of the unknown headline risk. I think that the better play here, and if I didn't mention it, up volume is declining, but the chart still looks good here. I think the better play here is or are the regional banks using DPST. Now, they were leading the money center banks. They are lagging right now. I think that this is going to end fairly soon, and I'm going to be looking to buy the DPST. Again, the regional banks. They don't have the trading exposure. They are more reliant on rising yields, but yields did pop this week. And remember that tomorrow is the GDP report. And if they get the 4.3 or better GDP read, you can bet you're going to see yields spike. So the banks should do well. Members, more to come here. I spoke about the 2-hour chart setup yesterday on Market Wrap. Go check that out. It's in the members area. Here's the yield on a weekly basis. We broke out this week out of this wedge formation, a very bullish setup. We are off the highs of the week, but we're once again flirting with a 3 handle on the 10-year yield. That helps the banks. UGAZ, daily chart. We broke out here, although we closed down on the day on the 20th. We did manage to break out. Then on the 23rd, we gapped down and then moved higher yet again on the 25th. Now we're seeing a continuation breakout move. It looks as though commodities are beginning to show signs of life. But with the GDP report tomorrow, I'll talk about that more in a moment. I don't want to go touching commodities until that report is released, because I'm worried that this may be a trap. I'll talk about it more as I go over the pre-market activity in a couple of minutes. The next chart up, GOOS. We booked profits on GOOS back here. It's been consolidating ever since. Now, we do have a lower high here. It's a bit of a concern, but no lower lows yet. Note how the Bollinger Bands are tightening. Right? That's a good sign, because the probability of this consolidation benefiting bulls is still very high. Why? It's because the trend is your friend. I may be a contrarian, but I do not ignore the trend and acknowledge the fact that as goes the trend, normally so goes the stock, ETF sector, whatever you're watching. So I still like GOOS. I'm not ready to go buying yet. Let's throw some new lines up here. Let's freshen up this chart. So here's what we're looking for. Actually, this is the value of throwing lines up here, is that, you know, without that lower band of support annotation, I didn't realize that we actually broke down below yesterday support. Now, that's a bit of a concern, but I'm not long, so I could still like the shares, but I wouldn't add here. Where you do have support is just below at the 20-period moving average, which is still rising slightly. So I still like the shares of GOOS. I'm just a little bit more cautious than I was 1 minute ago, okay? So just appreciate the fact that we closed, let's call it at the lower band of support, if not below it, but we did close at the 20-period moving average, which has provided support in the past. So a bit of caution here, but I still think that we move higher on GOOS. Intercontinental Exchange, if you're not a subscriber to our free best stock charts, go to the website, enter your email address, get it sent to your inbox. I do it normally each Saturday. I discussed Intercontinental Exchange over the weekend. It did, in fact, rally this week. I think that we are setting up for a continuation move higher. We're looking to buy the shares. We have a bullish key reversal. We have Stokes which are rising. Volume was good yesterday. We did have some selling the prior day. So ICE still looking good. We'll leave off these charts and then we'll segue over into the pre-market activity in a moment. But we'll leave off here with LABU. Now, LABU, we stopped out of earlier this week. Why? It's because we had to. We had a stop loss here. It continued lower. But I still like the shares. I went over this chart yesterday with members on Market Wrap. Actually, this chart and the 2-hour chart. So members, if you haven't seen Market Wrap from last night, go check out my analysis of the 2-hour chart. It'll indicate to you what my theory is with regard to how we want to re-enter the LABU trade. I will caution that we have Stokes, which are now beginning to trade down below the 50 level. That's not generally good. But the sector is still in an uptrend. We do have a lot of resistance above. But once we get through, or if we get through, 116.52, last seen back here in January, let's go to a monthly chart. You have a lot of upside potential here. Next resistance level is up at 150.01. So LABU, we still like. Even though we stopped out, we had to obey our discipline. But we are looking to get back in. And it doesn't necessarily have to be at a lower price. Well, what matters is the risk reward, right? We want to get in when the market is saying that the shares are showing signs of strength and that the probability of us making money is higher. So we may, in fact, get back in at a higher price. But does that really matter? No, it doesn't. And that's what a lot of traders get caught up with is I'm buying back at a higher price, therefore I'm a loser. No. If you're stopped out to minimize your risk and you're buying back in on strength, you're playing it smart. Don't count pennies when you should be counting dollars. Let's segue into the pre-market activity. Okay, we're going to kick things off with the S&P 500. The last time I spoke about the S&P 500 on Swing Trading Today, I said that we looked strong in the morning. I predicted that we would move higher. Since that point in time, we have moved higher. What am I thinking this morning on this 4-hour chart? I think that we are moving higher. We are down in the pre-market. That's okay. What we're seeing here is a digestion, and actually we're beginning to break out here, a digestion of these gains, and now we are beginning to break out of this pennant formation. Take a look at your RSI. RSI is moving higher, putting in higher lows and higher highs. Exactly what you want to see, respecting the lower band of support. So while we are down in the pre-market, I think that we are moving higher today. Now, let's talk about tomorrow. Tomorrow is a very, very critical day, folks. Why? It's because it's going to give the players that are on Wall Street the opportunity to play a lot of games with your head. The anticipation by the market is that we are going to get roughly a 4.3% GDP growth. Now, if we get that number, I'm predicting that in the pre-market, they are going to spike the futures very, very high. Now, you should be thinking to yourself right now, Bob, they should. Why is there a worry? It's 4% GDP growth. We haven't seen that in years. And it is good news. I love my country. I want to see great GDP growth. But loving your country has nothing to do with interest rates. Because the reality is that the smart money will be out there thinking, okay, if we have an economy that's growing at 4 to 4.5%, yet interest rates are this low, inflation is on the horizon, the Federal Reserve will need to raise interest rates far more aggressively than what they're doing right now. That will later in the morning become the headline, and we may see the risk of a sell-off tomorrow morning. So my word of advice is do not chase the market tomorrow morning if we get that 4% read on GDP, because you may just be a lamb getting led to the slaughter later on in the day. Be careful. Now, if GDP growth misses, then we're going to be looking to put on commodity trades, because commodities have been showing signs of life. I'll get to those in a moment. Let's first go to the NASDAQ. The NASDAQ is down sharply this morning. That's due to Facebook. What's going to happen with the NASDAQ today? I think that today is probably going to be a rough day. We are off the lows. We were lower. We'll probably get a counter trend move. Let's see what Facebook is doing right now. Whoa. All right, Facebook is off of last night's lows. We were down as low as, what was the low? Wow. 164.30. We are at current at around 179 per share. So we are bouncing back to the NASDAQ. So the NASDAQ is probably a buy today on this pullback. Why do I say that? Well, you're probably going to get some sympathy out of the other internet names pushing the NASDAQ lower. You'll probably get a rebound tomorrow, early next week. Somebody's going to be thinking that Facebook is a bargain at these levels. Just as you saw a rebound yesterday on Netflix, you're going to get a rebound on Facebook. Remember, I just went over Netflix, and Netflix looks poised to rally back. I'm ready to short it at higher highs, and I may be doing the same with Facebook, but I wouldn't go shorting Facebook into this sell-off. In all probability, somebody's going to be buying the dip this morning, and they'll push the NASDAQ higher. Does it close at the highs of the day? Does it close positive? I don't know. I simply don't know. So right now, we just need to know the mechanics of what is driving the NASDAQ lower, and it is Facebook, and possibly, let's check out Google. Yeah, it's down this morning. Netflix, not much going on with Netflix. Actually, there is. It is down about $10. So we see what's going on here. The internet space is weighing on the NASDAQ. Let's go to yields. All right, so the yield is pulling back this morning, and we have broken out on this 4-hour chart above this upper band of resistance. Now, we broke out back here too, right? Yesterday, but it was unable to hold its mud. It broke back down into this trading range, retested the lower band of support. We are now breaking out yet again, and that is putting weight on the yield. So what does that mean? What that means is that you got to watch out for the banks. There's probably going to be some pressure on the banks this morning, but overall for the market, it doesn't mean much. Tomorrow, though, is a different day. Watch out for that GDP report, folks, because if it comes out 4% or greater, you're going to see pressure on bonds, and you'll probably see yields get jacked up higher. The U.S. dollar, it is down this morning. It is off the lows of the session. Now, the dollar has been showing weakness. Why? It's because President Trump has basically been weakening it. He's jawboning the dollar down. The problem is that you have the Japanese doing the same thing. The Chinese are aggressively doing the same thing. So tomorrow, again, I hate to keep going back to this, but it's an important number tomorrow because there's so much hype. Tomorrow's GDP report, if it comes out 4% or greater, you're going to see the dollar in all probability rally, unless, of course, we get a tweet. You don't know what the president, he can send out a tweet at any time. The guy's pretty savvy. He'll know what's going to happen with the dollar. He doesn't want this dollar strong. Why? It's because he wants to exact as much pressure on the Chinese and on the Europeans as possible. And by allowing the dollar to strengthen versus their currencies, minimizes the impact of the tariffs that we put on them. So, in a nutshell, that's why he wants lower yields. Besides the fact he's a real estate guy, he likes lower yields and a lower dollar, especially moving into election season. Let's talk about gold. Gold broke out on this 4-hour chart. Remember the other day I spoke about gold and the miners. The miners were relatively weak versus gold, where I was talking about gold having broken out, putting in a higher low, and we have since that time begun to move higher, putting in higher lows. The only thing missing are higher highs. Now, if tomorrow's GDP report misses big, the dollar will drop, gold will rally. We'll want to add to our gold mining position. Now, if GDP comes out strong, you're probably going to see pressure on gold, so just be careful. Let's leave off with oil. I'm getting a little bit long in the tooth here. Oil is up slightly this morning. We're putting in higher lows and higher highs. We're long of energy. We're going to look to add more to our energy position as oil moves higher. But what we need to do is break out of this channel here. But we're not there yet. All right? We need to see a breakout. RSI is looking really good. We have higher lows and higher highs getting put in. And there you have it. All good stuff. But we do have a lower high here, actually, on this last peak. So I would really wait for the breakout on this 4-hour chart before I add it to my energy sector position. Why am I talking about oil and the energy sector in the same tone? It's because they trade in tandem. If you don't have oil rallying with the energy sector, then the energy sector, if it is rallying, the rally probably will not last long. So I would wait for the breakout here. Be patient. And that's it for this morning, folks. If you're watching this on YouTube, please hit that subscribe button. Click that bell if you want to get notified of future videos. If you want to get the best stock charts video, which comes out each Saturday, enter your email address on the website. We hate spam too. You will not be spammed. And if you watch this on any social media platform, follow me there. And everybody have a profitable trading day. Members, we will talk definitely later on today and definitely tomorrow morning, okay? We'll be providing some pre-market analysis of the GDP report and the market activity tomorrow morning to members. So sign up for that 14-day free trial offer. Everybody have a profitable trading day. Be well.